Hello again, everyone. It's Vince Four from TradingWinds.com, and this is our update for December 9th, 2018. Let's take a quick look at how the markets finished off last week. We did see another brutal sell-off on Friday. The Dow was down 588 points and has now given up the gains for the year. The S&P 500 was down 62 points. The Nasdaq was down 219, while the Russell was down almost 30 points. And, the one thing to note here is that the Russell has taken out these lows, and that is not a good sign. We'll come back to these charts in just a second. The bond market did close slightly higher. The yield on the 10-year note is now at 2.852. Crude oil gaining slightly. It was up 64 cents or 1.24% after OPEC and allies did agree on a deal to cut production. Gold continues to climb. It was up another $10.40 on Friday as the dollar continues to show some weakness here. Now, let's go back to these charts. We've been talking about is this just a correction, or are we going to see the big drop here? Well, these recent lows here are really crucial. And as I mentioned earlier, we did see this being taken out on the Russell. We have not seen it taken out on the Nasdaq or the S&P or the Dow, but very bearish formation here on Friday. Big red bar. Bearish engulfing pattern across the board. And to give us a better idea of, is this really something we should worry about? One thing you can do is take a broader view of the markets. And what I mean by that is just go and look at some main ETFs of different sectors. So we'll start with the XLE, the energy sector. And obviously it's been brutal here. Excuse me. Another major sell-off here on Friday and a big bearish engulfing pattern. You look at XLF, the financials, same thing. Putting in a new low here this week. XLK, the technology sector, again, another brutal sell-off and very close to these previous lows. You look at consumer staples, and they are now threatening to take out that low. XLU, really, the utilities, is the only one that is looking positive here. Put in a fresh new high this week on Wednesday, and continues to look pretty good. The healthcare sector, also painful. And last but certainly not least, consumer discretionaries also looks to break down. So this looks like a very broad sell-off, and certainly looks like it can continue. That's about it for now. Enjoy the rest of your day, and we'll see you on our next update.